Hi, everyone. Today, let's talk about the upcoming week, and then we'll get straight into the charts. I always go over the more obscure charts on the weekend, so this is definitely going to be a good episode. And I have no positions going into the next week, so I don't have a bias up or down right now. If you like trading stocks and options and making money, definitely like and subscribe. I make videos like this every single day that the markets are open, as well as Sundays, so make sure you hit the bell so you don't miss out on any future episodes. Welcome to the Portfolio Bulletin. Let's get started. So starting off with the weekly brief, I actually signed up for Finimize. They were extremely cheap and I wanted to see what they were worth. And honestly, I've been pretty impressed. They're really short, pretty interesting. So let's take a look at what they have to say for the upcoming week. They talk about how Goldman Sachs earnings was pretty tough and pretty poor. Talked about that last week. They talk about Microsoft and the amount of people that they're firing. They also have earnings coming up this week on Tuesday. And then they talk about the up move in Netflix, which we did already talk about as well. And moving into connect the dots, they say investors are starting to shift their focus from inflation over to earnings. We've talked about that for a while as well, but it is starting to become more and more of a thing. So Goldman Sachs, like we talked about, pointed to the potential for a lot of down move based on earnings. Bad news is always bad news when it comes to earnings. Netflix was a bit of a shining spot. I think they're kind of a unique business in the way that they make money. And I don't know that you can really correlate their success to the rest of the markets or even tech. Also, this week we have Tesla earnings coming out on Wednesday. I do think Tesla is going to fall on earnings. Tesla always seems to fall on earnings here recently. And the nature of their business just tends to go down with a depressionary economy. When people are concerned about their earnings and their job altogether, people are not going out and buying new cars. It's definitely more of a cyclical industry. Even if Tesla is doing it better than everyone else, just the nature of their business is going to struggle in the type of environment that we're in. So I'm looking at that to go down as well. Looking at Alphabet here, they talk about them cutting their workforce. We're starting to see those job losses. Talked about this before. Job losses are the last thing you see generally before an economic downturn. So we see profits starting to turn down a little bit, but we haven't seen that unemployment rate turn up quite yet. And it seems like that is starting to happen here recently. Moving on, they talk about how bad news is always bad news when it comes to earnings. Not the same way that we see economic factors when it comes to the Fed. Stocks just go down when they're not performing on the top and bottom line. And lastly, they say here, recessions happen and you pretty much can't get around it. And statistically, this seems like the time it needed to happen. Moving over to the charts, starting with the daily and the weekly for the S&P 500. We're kind of stuck in this channel right now, so we have upper resistance, which is extremely strong. We do have a little bit of lower support, which has held twice at this point. Don't think this is going to hold longer term. I do think that we are moving down still. We've tested this 200 one time. We did not test it once again, so a little bit of strength on that down move. You can see on both charts looking a little stronger. You can see that even the MACD here on the weekly chart showing some strength. But like I said, I do think we have one more higher low here on the MACD, so we get a swing down. This gets back into this maybe 7 to 8 range on the MACD when it comes to the EMAs. So we see another upswing like we had. Get another downswing, create that higher low, demonstrating a little bit of strength. It'll be interesting to see where that happens. Like I said, I think we're going to break down, come into this zone. If it does make more of a upside down head and shoulders type pattern, where we have a left shoulder, a head, and a right shoulder over here, that could be a pretty good indicator that we're going to go higher. We'll look at some charts later that show why I think we might be in a decent area for a bottoming process based on the conditions that we have right now, assuming that earnings do not move down in any major way over the next quarter or 2 quarters. But looking at the RSI here, you can see we're still above the trend lines, does look strong in the weekly. We've not come in and retested that trend line yet. The trend here on the weekly is sitting at 48.73, where RSI number is at 51. So it could come down, retest that support. If it holds, that could be a pretty decent indicator that we're going higher. You can see what that looked like here on the August high. Go ahead and maximize that panel so you can see what that looked like a little bit closer here. So we had the August high, came down, touched that support level, bounced, and then broke through. Right now, we've come back in, retested pretty aggressively off of that level, and we haven't come back and retested it yet off of this recent high. If we do come back in and break through that level, then you would expect lower prices. But right now, we're still in a slightly bullish pattern here on the RSI. We do have to entertain the fact that we could be going higher based on where we're at. Similarly, on the daily chart, demonstrating some strength, came up, made a slightly higher RSI reading from that high on December 13th, tested the SMA on RSI, and then bounced from there, showing a little bit of strength. Moving over to the NASDAQ, here on the index chart on the weekly, you can see this looks pretty strong, a little bit stronger than the SPY. So we had a positive week, unlike the SPY. We're not quite at that resistance level, and it does seem possible here that we push up, retest that same high, and retest the longer term trend line based on the strength that we've seen here recently. If we do get into that zone, that would cause the S&Ps to overshoot the current trend line and build some positive momentum. We do get into that zone on the NASDAQ, though, I do think we'll find some resistance that would be more of like a double topping style pattern. I know we've talked about the head and shoulders style pattern we have, where a left shoulder, head, right shoulder, but that would assume that we fail pretty much here. So that's certainly possible. Maybe we go sideways a little bit and fail from here, getting back below the 200-week moving average. That would obviously be very bullish. And then we have a neckline and significant movement down to support in that 9,500 area. At this point, we do have to entertain the fact, based on the strength that we've had here recently, potentially this pushes up into that resistance, retesting that trend line and retesting that previous high, demonstrating some strength. And maybe at that point, then we get the sell off, maybe find a little bit of a higher low here and then look to break up from there. That would be a significantly different thesis than what we've been looking at with the head and shoulders pattern, but it does seem possible at this point based on the amount of strength that we had last week and the week prior. Looking at the Dow, this does look much weaker here on the daily chart. You can see we created that high, came in, moved lower, tested support, filled the gap here, but you can see the RSI did not get back above the SMA on the RSI chart. Momentum is still bearish here despite the up day, and you would expect this to continue lower. The Dow has definitely been showing some weakness versus the other major indices, and that did continue here recently. Moving over to the Russell on the weekly chart, similar to the other major indices, but a little bit stronger. Definitely finished higher on the chart overall versus the NASDAQ. You can see well above the 200-week moving average. Does have multiple bottoms here, high low. Did struggle at that 189 level, which has been a very strong level of resistance. You can see we interacted with that level in January of 22, once again here in June of 22, once again here in September of 22, and then that was the most recent high in November of 22. So very strong. Definitely looks like we're going to break down from that level. And we did test it once again here this last week, sold off from there, but we did bounce into the end of the week, just like the other major indices. Jumping over to the daily chart here, let's see what that strong filled the gap. Seems like we might come up, retest that level, and if we do, that's a double topping pattern. Looks weak from there, and then you would have to expect that to come down to at least 181, 180, back in this zone. Are above the 200-day moving average here, just still sitting at 181 as well. So that would make sense. Come up, test resistance, fail, come down, test support at the 200-day moving average. If we do get a bounce from that level, then you have to start looking to the bullish side here on the Russell. Moving over to Tesla here on the weekly chart, we do have Tesla earnings on Wednesday after hours. Seems like we're probably going to rally into that, and then I would expect we would fail after that. So we have decent momentum here. You can see we had consistent steps down the last 2 weeks, similar to what we had here where we had kind of a bottoming formation and then consistent steps higher, a little bit more of a flattening after that for a couple of weeks here. But I don't really expect that to happen. I think we're going to get back up to the 9 EMA on the weekly chart. Should be about 10 points higher than we are right now. So strong momentum on the weekly. We did get oversold conditions here on the weekly 2 weeks ago. So definitely could be a decent bottom down here at 113. And if we do break the 14-period SMA on the RSI, that could potentially present more bullish price action. Again, similar to what we had here where we got above it, retested, and then got the continuation, which ended up being a pretty decent rally from about 223 all the way up to 300. Really pretty strong over those couple of weeks. That certainly could happen here. Maybe they do get good earnings. They rally back up and retest the 200-week moving average. Certainly possible. It'd be a big push all the way up to 166. But not impossible from where we are right now, especially considering the oversold conditions that we did get. Once we get into oversold conditions, generally I would expect a retest of the 50 line. Similar to what we have over here, we got major overbought conditions, and then we moved all the way down much below the 50 line, but at least got that retest of the 50 line on RSI. Similarly, once again here, we got overbought conditions in December and January of 20 and 21. Then we got all the way back down to that 50 line on RSI, which ended up signaling a little bit bigger down move. But either way, you get overbought or oversold. Generally, I expect a retest of that 50 line at some point in the future. Moving over to Microsoft here on the weekly chart. Microsoft has been strong, pretty much like the rest of the NASDAQ here. Bounced off the 200-week moving average, which has been support twice at this point. Came into resistance and kind of stalled out. We have earnings on Tuesday. That'll be interesting. They have been declining recently in their growth when it comes to cloud, which has been one of their biggest growth drivers here recently. So that'll be interesting to see. If cloud does not deliver on the numbers that they've been talking about, you could definitely see a decline there. That's the risk factor that I'm looking at. If we do get below this 200-week moving average, that's going to be a major indicator that we're going to see some lower prices here on Microsoft. It is worth noting that we did see a higher RSI read from that 31 October price when we tested the 200-week moving average to very similar prices, not quite the same. So you could argue it's slightly higher here. But we did get a much higher RSI read at 39.42 compared to 35.80 in a very similar price level. So strength looks like a higher high, definitely a higher low, looks like a little bit stronger on the RSI. That could potentially indicate that we could be in a little bit more of an upswing here. Moving over to the SPX divided by the M2 money supply. I do really like this chart because it does give you a very different perspective on where the SPY is in its pricing. Obviously, it's still in the downtrend. This chart does look the same, but the way that it's different here is that you have the pre-COVID highs at the same price level as the November highs. So if you're basing your resistance on that pre-COVID level, you would have timed this previous top perfectly. And interestingly here enough, on that SPY low, we got very close to the December of 2018 lows and a pretty decent level compared to where we were on the COVID rally. So in that same zone of June of 20, that's where we work in comparison to the October lows when you factor it versus the total amount of money that's available to be invested. And if we go back further here, you can see the May of 2015 highs was actually higher versus where we were for the SPY here recently. Only times that we've been lower recently was the 2008 crisis. So when everybody thought the world was falling apart and the financial system was on the brink of collapse, that's pretty much the only time that we've been cheaper here when you compare the current price and current level to the M2 money supply. We did have this only time that we've been lower recently than where we have been on this down move was this little bit of a dip that we had from July of 2015 all the way up through February of 2017. So interestingly, did a slight bounce off of this level. We did have this level on this chart, and I probably should have been paying more attention to it when we started to throw wicks through that level. But really what this is showing here is that we're pretty cheap compared to where we've been historically. And if we do come down and retest this level that we had at the October low, or even slightly below it, that's going to be a pretty good buying opportunity in my opinion. If we get down to the COVID lows, that would be an absolute steal for markets. Unless we're seeing profits and earnings really crater and go significantly lower, I do think these levels down here are pretty cheap in comparison to history versus the M2 money supply. I do want to look at the NASDAQ versus M2 just for a moment here. And basically, we're at a very similar level. We have that kind of notch just above the COVID lows. That's where we tested here on the NASDAQ as well. So very similar levels for the NASDAQ and the S&Ps. That really correlates with a lot of lows here. So the low of September of 19, very close to the May of 19 lows. The highs here in January and February and March of 2018. So some pretty low historical levels compared to where we've been recently. Of course, the NASDAQ has really rallied in terms of the amount of money going into growth and tech compared to historical prices. Obviously, tech has been growing significantly. But in terms of recent price action, we're at levels going back to January of 2018 when you compare it to the total amount of money available for investing in the M2 supply. Moving to S&P stocks over their 20-day moving average. Basically, this still looks weak. So momentum is negative here. Did not come up and retest that SMA. Still looks weak. You would expect this to continue down even after the rally that we had. Got up, filled the gap here just barely on the daily chart. And you would expect this to sell off after this point. So still short-term sell-off despite the bullish things that we've been talking about. Certainly possible that we see some lower prices over the next week or two, especially if earnings are bad for Microsoft and Tesla and some of the other companies like Johnson & Johnson, which is next week as well. So definitely seems bearish, did not show the same bullish signals that we got on the SPY and the NASDAQ. which is good to see if you are bearish going into the next week. Similarly, here on the 50-day moving average chart, still shows weakness. You would expect it to fail here. We're at resistance at the 14 SMA on the RSI chart. So looking weak, did fill the gap. You would expect this to turn back down here, even if we swing up just a little bit more to retest that 9 EMA, just a potential couple points higher than where we are right now, maybe another day or two till we get that Microsoft earnings and Tesla earnings on Tuesday and Wednesday. And then I would expect it to move down after that. Moving over to stocks above their 200-day moving average. We've talked about this one quite a few times, but it's worth noting that we did make a higher high compared to the August high, so we have more stocks participating in the rallies, which is definitely interesting. You can see the move down that we had from December 5th all the way into December 27th, and that stopped right at the August 18th high. That acted as support in that area. Now we have a double topping pattern, sold off. Looks like we're making a slightly lower high here. If that does materialize, then you have to expect that we're coming down into this 35 level, which has been a level of support and resistance multiple times. You can see here August 1st, resistance here in June of 21, interacted with throughout the beginning of November of 2022, and then multiple times here in the past as well. If we do get below that, then we have the 25 level, and then we have the all-time lows where we have the double bottom style formation at 11. And then I do have a level here at 1840 as well, a little bit weaker level, but definitely worth paying attention to. This seems like we're topping out here. Did not make a higher high, started to sell off, and it would seem this will act as resistance once again, even if we come up into this zone. And then as long as we get that breakdown, then we should anticipate lower lows, at least in the short term. Moving over to the 10-year yield on the daily chart, this looks like it's going to go higher. You can't assume that it's going to move lower at this point. We've created a solid bottom doji at the 200-day moving average. We got above this previous resistance. We're currently sitting on the 9 EMA on the daily chart, so certainly could get a retrace from there. But I would expect that to be fairly short-lived, come back down into this 342 area, bounce significantly higher up into this 366 level, maybe all the way up to resistance at 375. And if we do get that significant bounce here in the 10-year yield, that will be pretty negative for stocks. That means people can get better returns in government bonds at the risk-free rate, which generally drives stock market and equity prices down. You can also notice that on the RSI here, we're right at resistance. Looks like we just crossed it. RSI read was 44.01. The EMA is at 43.59, so just got across it on the daily chart. Let's jump over to the weekly just for a moment here to see what that looks like. You can see we've been in a significant uptrend. We've talked about that before. We did not come back down and retest this lower level of support, which you don't necessarily have to get a bounce. Certainly looks quite strong. You would expect weekly momentum to step down next week. That would be something to look at going into the end of the week. We had a fairly decent step up here on bearish momentum, currently at the 50 RSI level, which if you are still in a bullish trend, you would expect a bounce from that level. You can see we got overbought conditions, sold off to the 50, and then you would expect that bounce here, certainly back up into overbought conditions. If we do get that kind of a push, that's going to be pretty bearish for equities, and that's definitely something that I'm looking at going into the next week. Moving over to the dollar, we've talked about this one in every video so far, but you can see on the daily chart, we've been flat for basically 5 or 6 days. The whole week was basically flat last week. Continue to hold right at this 102 level, slipped just below it, pretty interestingly, to close the week. So that could be a little bit of a bearish push. Did not get oversold conditions on the weekly chart or even the daily chart here recently. But you have to look at this as a falling wedge at this point. So we had that big push, flat, couple of bounces here. Looks like a bullish falling wedge. You have to assume that that's what we're going to get. We're at pretty significant long-term support. And if we do get a bounce from this level, it doesn't even have to be that significant, maybe up to 108, certainly some possibilities in 106. Back up into this zone, which would be a pretty decent retrace of this down move that we've had recently. That would be very bearish for equities. This move down here does look extended, does look kind of exhausted. Momentum on the weekly chart, pretty choppy and flat, despite moving down pretty much every single week. Did have one slight green week to start off January, but at this point, I would guess that next week is going to be green, along with the 10-year yield. And if both of those things are moving higher, you have to assume that equities are going to move lower. Moving over to J&K, I know I talk about this one in every video, but I do want to touch it one more time because we did get divergence. We did not fill the gap on J&K like all the rest of the major indices, except for the Dow. So J&K did not move up and fill that gap. Certainly possible that if that happens, we get another day or two of push, fill that gap, hit gap resistance, and sell off. Right now, J&K is showing a little bit of weakness, indicating that there could be weakness underlying in the stock market, and that this could be looking to sell off next week. We did have an inside week compared to the previous week, which definitely shows indecision and definitely could be an indicator of downward movement. If we do get below the 200-day moving average, that would be another major indicator of downward price action. We did get below it and close below it on the 19th, but then we were quickly rejected from there on the 20th. We do reject from gap resistance or even fill the gap and move down. That would be a pretty decent indicator that we're going to be moving lower back into this 91-92 zone, and equities should move down at the same time if that does happen. Finish up the charts here with the VIX. You can see we are still moving higher. We did get a pretty big rejection on Thursday and move down on Friday, but we're at support. Certainly seems like we could move higher from here. The whole week was a candle of indecision, basically flat on the week, which is interesting. And especially after the big move down that we had the previous week, certainly seems like we could bounce from here. Definitely seems like we're at support and looking for a rejection, pushing back up into this 21-22 zone. And if we break above this previous resistance and we start to move up into this 23-24 area, that's definitely going to be an indicator that we're moving lower. It is worth noting here that RSI is showing that we are slightly below the SMA, coming into resistance here on the weekly RSI as well. So it could be an indicator that we're going lower. It definitely does not point higher quite yet on the indicators. Momentum on the daily chart did step down, but it was basically flat from Thursday to Friday. You would want to see a pretty quick rejection into Monday and Tuesday if we are going to go higher. But right now, RSI is not pointing to that happening. That's something you have to keep an eye out going into the next week. Moving over to my accounts, you can see I have no positions. I am not going one way or the other. I'm neutral going into the week. I am short-term bearish, especially after the big push we had and some of the shorter-term indicators. It does seem like the markets will be moving lower next week. But over the medium to longer term, it does seem like we might be fairly valued, if not slightly undervalued, especially if we get another pretty quick downturn, another bottoming style formation. That could be a longer-term bottom in my opinion. So short-term bearish, medium-term neutral, and longer-term bullish. Let me know down in the comment section if you like these longer style videos. I really only do them on the weekends because it's tough to get all this kind of content in during the week. There's just too much to go over, so I usually hit the shorter term charts. But on the weekends, I do think it's valuable to hit these longer term charts, so definitely put that in the comments if you like it. And make sure you hit the like and subscribe button if you got any value out of this video. Make sure you hit the bell so you don't miss out on any future episodes. I make this video every day that the markets are open, as well as Sundays, so make sure you check out those. Of course, none of this is financial advice. This is all for entertainment purposes. Good luck in your trading and have a great day.